Good afternoon, everybody, and welcome to this week's episode of Signal with Snorlax, brought to you by, of course, Because Bitcoin, as well as me, Snorlax, talking about, or answering rather, the question, are cracks starting to show in the market again? I think from a timing standpoint, we are starting to see some cracks, or at the very least, some tail risk really enter the market and manifest itself much more materially. What do I mean when I say that? Let's go ahead and get into it. Obviously, the S&P is still strong, right? So we want to get that off the bat, or get that out of the way right off the bat. We had this massive squeeze, largely driven by a crush in oil prices, a crush in volatility, and ultimately a crush in a lot of shorts, and a a historical rally out of something like semiconductors, right? Micron has been incredible, SanDisk incredible. I know that's more of the memory trade, but semiconductors, memory, it really does remind me a lot of alt season in crypto back in 2021. But I won't get too deep into that because I kind of wanted to talk a little bit more about the risks. Although I will say, this isn't necessarily an indictment on what I think that semiconductors are going to do in the short, mid, or long term. I think that's a much more complex question to be able to answer, because right now we're seeing weakness specifically out of things like Bitcoin and MicroStrategy, right? Selling off 25 to 30% from the local highs. I think we're seeing weakness in software, right? This retrace from this squeeze is absolutely nasty. And then, of course, we're now seeing weakness out of these hyperscalers, as there's kind of like this reflexive loop that as these memory assets are receiving more capital, more checks from these hyperscalers, the hyperscalers are just spending more money. So it's kind of become, I wouldn't call it like a doom loop because I think it's fundamentally different, but it's like equity. It's like a large caps version of that. And, I think we're seeing things like Microsoft obviously respond in kind. I would say this is front running what we're seeing, like the structure that we're seeing out of IGV, probably out of a lot of other software. And I think it's only a matter of time before we see Meta also break these lows kind of confluent with that, right? So we have Meta could break these lows. We have Microsoft already breaking these lows. We have software that could be breaking these lows soon. And we have Bitcoin that is already trading below the lows that we set, of course, earlier this year. So, the question becomes, are we front running a larger equity market correction? I would say probably. I felt this way for a while, but again, like semiconductors have rallied so hard, and the market does have a pretty big source of liquidity influx, specifically from the devaluation of the yen. I've seen Capital Flows talk about this pretty in depth, but we have these positive catalysts ultimately that have been present for price. So again, I want to get that out of the way right now. We could continue to move higher if these same dynamics continue to play out, right? Semis ripping, and ultimately the yen being not rapidly devalued, right? As long as it just kind of continues this slow grind higher, cheap yen converted back into US based assets. Like, why have we melted up? And things like Dell and IBM and so many other names that I haven't mentioned, like Micron, of course. You have to mention it when you look at that chart. That is really a huge part, or rather, that's like the causation of that really does have a lot to do with the fact that we're seeing the yen being devalued. But if you were to see this, I would say, for one, either sell off aggressively or blow out to the upside, then it becomes a much larger problem of bond volatility within Japanese markets. But right now, the Nikkei has been a primary beneficiary of this dynamic as well. So if we start to see some weakness in Asian markets, I think that could be worth watching as well. We kind of saw a taste of it, I think, or really, like, is this a 3 drive? Are we going to gap up to new highs? I guess it's kind of TBD. But again, I do want to kind of get that out of the way at the beginning of the video, that semis are, I'm treating them kind of separately from the rest of the market. But I do think that the rest of the market, the weakness that it shows, specifically as it relates to the timing of when a move could occur, is going to tell us a lot about what semis are going to do, at least locally speaking. But let's get into some of these individual tickers now that kind of like that introduction is out of the way. I'm sorry I haven't been able to cook for you guys for like 2 weeks. I don't know if you guys have missed it or not, but had vacation last week, had something come up the week before that. But here we are. Happy that we've given markets some time to obviously sift through everything. Is this distribution on the S&P? Is this just kind of consolidation before we ultimately move higher? I would just tell you from a technical standpoint, if we were to reclaim these highs and consolidate, I would be looking for a pretty aggressive push higher out of the S&P. I've told our Discord subscribers kind of my plan for how I would approach that. But I do think if you see some price action that mimics something like this, yes, there are risks present in the market, and I'm going to outline them in this video, but I would be favoring a pretty aggressive upside move from the S&P if that were to materialize, probably into the end of July and early August. And then I would think you would run into some problems. But right now, I don't know if I think that's going to happen. And I'm going to point towards the hyperscalers and software and Bitcoin for why I think that's the case from a timing standpoint. I've made the comparison with Bitcoin specifically, and maybe that's a good place for me to start, about how I feel like these structures are really kind of mimicking like 2008 distribution, or really like the whole 2008 or 2005 to 2008 market cycle for a lot of these assets, right? Like Bitcoin. Is this just the Dow in 2008? If you don't know what I'm talking about, might as well just point it out. Why not? I mean, I talk about this all the time, but we had our speculative, massive like run up on Bitcoin, bear market. You've made higher highs here on the Dow, and then we started to sell off. And then, you know, like this level here is kind of where, or really kind of like this structure is where I felt like Bitcoin has been for a long time. Are we going to, like, a lot of people are going to rush to call the bottom here on Bitcoin because this is a level that has to hold. But we don't know about, for one, is MicroStrategy blowing up? Is there more embedded leverage to blow up? And time, I think, has maybe complicated this trade mentally for a lot of people, mostly because we haven't had a capitulation doesn't mean that we won't have one. I mean, I hate the 2022 comparisons, but Bitcoin ranged for 4 or 5 months in 2022 before it finally ultimately marked down from 47K to 17K in the span of like 6 weeks. I kind of feel like we're in the midst of that right now. Maybe it plays out similarly, maybe it doesn't. I think the crux is very similar to what we're seeing out of the Dow. I think when we look at something like NVIDIA, this is maybe a more applicable structure for something like Bitcoin. Let's just, yeah, why not? Let's take it on there. We'll do some fractal chutting since it's been a while since I've cooked for you. But yeah, I mean, I really feel like to a large degree, we're kind of seeing an unwind like this start to play out. Maybe it doesn't have to look exactly like that, but kind of what I'm expecting more or less from Bitcoin here is that we lose this level and that we form some sort of bottom down in here, a very symmetrical downtrend for a very symmetrical uptrend. Makes perfect sense to me. So why is this relevant when we're talking about software? This becomes another important question, right? If I'm comparing these cycles to 2008, then surely we can take further cyclical analogs from that time period. You know, we just kind of like look through some of these stocks and some of these funds during that time period. We can get a pretty good gauge for the way that some of these assets can trade, right? We have a consolidation, we have a slow burn buildup, we've got a topping structure, a big move down, and then this is the part where I want you to pay attention. In this particular instance, we formed a range, we deviated that range to the upside, and then once that was completed, once we deviated back within this range, the downside pretty much occurred immediately. It was one-way traffic into capitulation. Now I want you to remember this structure here, right? Range, deviation, acceptance, back in the range, capitulation. Let's look at a few charts, guys. When I look at Microsoft, what do we have? We've got our similar markdown after the slow grind up. We've got our big deviation above the range, and now we're marking down. You will notice that we have not given any bounce since we put in this squeeze. And now it looks, I mean, Microsoft to me looks like it's about to capitulate. The narrative around hyperscalers is very poor right now. Let's look at IGV. Has not completed the move, but it's the same thing. We formed this range, we deviated the range. Are we going to see one-way traffic down? Bitcoin, same thing. Really the exact same thing. Coinbase, same thing. Maybe you didn't give like the big squeeze, but it's really like all of these assets. And I could point to some private credit names as well that look set to mark down, like Blackstone and Blue Owl. I'm not going to talk about them in this video because I've got a lot to talk about today. But that to me really communicates from a timing standpoint that at the very least, like software and software adjacents, these assets that have been trading very correlated to these markets are probably getting ready for a pretty aggressive move down over the next few weeks. So we will see how that plays out. That does not have to mean like a multi-year top on semiconductors, but it does tell me this basket of assets is going to mark down pretty soon, or at least that should be my base case as we go into the month of July and really throughout this next month into July OPEX. So I hope that helps. Semiconductors, much more difficult question for me to answer. Maybe we can get some signal out of NVIDIA. This does look increasingly weak to me though. I am wondering, and this is kind of where we can discuss some of those other risks within the market, because I you know, if you've been following my videos for a while, you know I've talked about the risk to the market through software, through private credit. If those are getting ready to mark down again, like there will be broader effects within, you know, I would say like the broader markets. This is where we can get into the next risk factor, which I think is that correlations are just so low. They are so low. I've seen some smarter people than me when it comes to like analyzing volatility compare this period on like short-term correlations to what we saw like right before Bullmageddon. So maybe we are like I would say we're overdue for a larger spike on the VIX. I don't know what that's going to look like. This looks a bit like a test pump to me. Now we could continue to see this stay relatively pinned. And if the index continues to go higher, then we could be in a regime where we see volatility continue to move up with the index pricing. But I'm skeptical that we see that regime continue. I think it's more likely that we get an outsized spike on the VIX to whatever level, I don't know. But I think when that happens, we're going to see these short-term correlations really start to go crazy. And when you have this much dispersion, right? When you have this much dispersion, this much movement from small caps, that can lead to some massive move. Like you don't need the VIX to pop to 100 for a small cap asset to mark down 50 to 80% on a correction. We've seen it happen. Like look at Robinhood last fall, look at crypto. I think you're going to see a lot of small caps really fit that bill as well. I mean, I'm just off the top of my head, I think like Iron is going to be one of them that marks down massively whenever we do get this correction in markets. And I obviously, as I've already outlined, I think software and hyperscalers are going to be on the chopping block as well. So we'll see as these assets go down, do we see more and more kind of risk creep in and this like self-fulfilling prophecy? That's really how Bullmageddon happened. Well, that's part of why it happened. There are a lot of things that went into that, specifically as it relates to like structured products, but don't have enough time to go into that today. Yeah, I mean, I would say those are most of my thoughts on equity markets. The yen, the divergence that we're now seeing between the USD JPY pair and TLT, I find very interesting. I can't form a conclusion on it yet because I want to see price play out more. But I would say if you're bullish, you just want to see this remain low volatility. If this gets too aggressive one way or the other, the whole market's going to feel it, either because you're blowing out to the upside and Japanese bond yields blow out with a dollar wrecking ball, or USD JPY sells off aggressively and you get a yen carry unwind similar to what we saw here. So I guess we'll just have to see. Maybe that's a good time to talk about Bitcoin more broadly. I've kind of already given my thoughts. As far as like what to expect from here, we are trading at the lows. I've outlined to you guys why I don't think we're going to see this continue to range. It makes more sense to me that we see, at least using kind of like our 2008 analogs, this move down seems quite imminent to me. We could, of course, like in theory, we could always give like some really cringe further distributive price action here before we roll over. I mean, we saw something like the VNQ do that in 2008. Yep, another 2008 analog, right? We had this super long-winded range here on the VNQ. So maybe we see something like that play out. Isn't really my expectation though at this point, and I'll tell you guys why. So MicroStrategy just looks like it is in dire straits. Dire straits. Why would I expect a bounce from this chart? I've been comparing this on X and in our Discord to this chart, specifically this shoulder here on First Republic. I mean, they're basically identical. They're basically identical. We'll just take like a little bit of a, not the full fractal, but you get the run up. We saw that little tiny and maybe I even zoom in a little bit more to illustrate this point a little bit further. Yeah, let's do that instead. Because this to me is, they're just identical charts. It doesn't have to play out exactly the same, right? But you see what I mean. We get this consolidation, this 3-drive consolidation, the run up, pull back with no, or really like this move down with no pullbacks, this little baby consolidation with no bounces. And then when the daily RSI hit oversold, it was pretty much one-way price action down. And now when we look at MicroStrategy, what do we see? Right? We've got basically a 3-drive consolidation here, a big markup, pull down, baby consolidation. We're seeing the daily now cross into oversold conditions. Let's put it on log. Now, I'm not saying that this is an actionable fractal, but it is kind of like, it does speak to the idea that I'm looking for mostly one-way price action from here. Like some of these assets should not squeeze further. And if they do, it'll be time to reevaluate, I think, a bearish bias on a lot of them, either from a timing standpoint or whether it's going to happen at all. But I can't help but feel like this is about to just completely puke its guts out. And if that happens, there's just no way that Bitcoin doesn't also puke its guts out at the same time. I don't think that Bitcoin's going to go like as deep as MicroStrategy would on a relative basis, but obviously it's going to come down a good bit if MicroStrategy continues to have problems. I tweeted about this on X. I mean, like it's almost like this palpable level of complacency that, all right, the biggest Ponzi in the cycle could be blowing up, and I'm just to assume we're going to bottom 5 to 10% lower than the previous low. Why? How does that make any sense? How does that make any sense? When Bitcoin had Do Kwon top blast a complacency shoulder, a macro complacency shoulder with lots and lots of leverage, what happened? We went from 47K to 17K. I mean, what is that? Like a 60, 70% drawdown. You're talking about like a 5 to 10% correction from the lows with an even bigger Ponzi. And yet I'm the doomer for suggesting this. That doesn't make any sense, at least not to me. The only question is timing. And I've given you guys kind of the reasoning why I think that timing is sooner versus later. This is not going to help things either if this continues to escalate down. But I've said before, this is a more complicated trade to me, so I'm just kind of tracking it. God, Devo looks insane. Yeah, this looks insane for a move higher. I wonder if we see correlations in crypto start to refocus a bit. ETH just, man, looks dire. ETH against the Qs looks dire, but I guess so does ETH against Bitcoin. Or Bitcoin against the Qs, rather. I've heard a lot of different bottom targets for ETH. I'm not going to make one, but I'm going to say if ETH crosses back into triple digits, I believe we're going to flush out everybody who says I'm buying triple digit ETH without hesitating. What that means, I don't know. I'm not gonna dubiously speculate on exact pricing, but if we get into the triple digits, I would just say keep your mind open to where it could trade, because sentimentally speaking, everybody's going to want to buy a 3-digit ETH. At least there's a big cohort of people who love ETH, and for the record, I think that ETH is going to be maybe the winner of the next cycle among large caps. But man, if we cross into 3-digit ETH, like, I think you're going to see some nastiness that probably shakes out a lot of people who are like, yeah, I want to buy 3-digit ETH. I don't even need to see what the price is. So whatever that means. Coin looks like software. I mean, I've been saying for a while, like, I've never seen a chart bottom like this. I don't think this is going to bottom like this. Big markdown coming for Coinbase. The question to me is like, all right, is Coinbase going to see a micro strategy type of markdown, or is it going to see like maybe a bit more of like a reserve sort of markdown, which is very relative, right? That's very relative. I won't elaborate on what I mean when I say that. Hyperliquid, I guess, is probably the last asset for me to cover. There's not much for me to say. I'm not really trading this at the moment. If the S&P goes higher, it's going to be a great long. But as you guys can see, Hyperliquid is basically just trading as levered beta to the S&P. There's nothing more to it than that. Like, really, and I don't even want to like be critical, but a lot of this is kind of where it reminds me a lot of alt season in 2021 with equity markets. And I guess you can include Hyperliquid in this discussion as well. Probably Zcash too. Everybody thinks they have this shiny new asset, this alpha that the market is not privy to. And then you look at the way that these things have traded relative to market leaders, or right, just at the most basic level, like indexes. You know, we have the S&P with Hyperliquid. We have Zcash trading basically identically to NVIDIA. It's like your alpha is just beta. And everybody thinks that they have kind of like this alpha as if they're Warren Buffett, when you're just speculating on beta. Not that there's anything wrong with that, but you need to understand that, because if the market does pull back, if it does draw down, your market's going to trade like beta, not alpha. And if that's the case, that's how you form forever bag holders, as we saw with the unwind in 2022. So those are my thoughts on the market, guys. I think we've seen some pretty big developments over the last few weeks, specifically as it relates to these hyperscalers, software, Bitcoin, and crypto. And I think those things are communicating that there's going to be risk in the market here over the next few weeks, that can produce some very actionable trades and potentially some very actionable moves down if our comparisons for these assets to 2008 are accurate. I do think they're accurate. Semiconductors, SpaceX, those are way more complex trades to me. But I would have to imagine if we're seeing the moves down that I think we can get on some of these assets, that those will probably mark down to some capacity too. So I hope that answers the questions, or if you guys had any questions, I don't know, but I hope you enjoyed the video at least. Get a good read on why I think these names in particular are communicating timing for the market here. And if they do not do those things, then I think, of course, we're going to be in for a really bullish period. specifically with semis and at the index level. But I'm keeping it pretty simple. I think a lot of these assets are ultimately trading very similarly to each other, very correlated. And there's a lot of overcomplication, I think, because of the fact that there are so many assets showing so much volatility. But you can keep these things very simple right now. And I hope that this video helped you do that. But thank you guys again for tuning in to Signal with Snorlax. I'll be back next week for another episode. But until then, thank you. And of course, stay safe.